Welcome to the ARMR Report, ladies and gentlemen. This is an in-game update, and what we're going to do here is walk you through step by step the day trades we're involved in capturing alpha in the stock market long the S&P, the NASDAQ, and the small cap index. Now, I'm in the middle of trades right now, so you might have to bear with me if I have to go execute something, but I wanted to walk you through this as we go. It's always fun when it's happening in the moment. So the ARMR Report is really about protecting capital and capturing upside when the opportunities present themselves. And so what I want to do for you this year, whenever I do these videos, is really just share with you what is the information that's going to make us money or protect our capital, and then how do we use that information. So following that path, let me just walk you through real quick, and I'll start by saying, of course, this is how I run my own personal money. I've been doing this over 30 years. I share this information to help improve your own success, managing your own capital. Please do your own due diligence and all those other things before you ever execute what I say or anybody else on the internet for that matter. Okay, if you have an interest, you can always subscribe to the YouTube channel right here or the ARMR Report. Feel free to do that as well. You can check on the armorreport.com website. All right, so here we go. Let's dive right into the facts of the case. In our morning meeting, which we share with ARMR Insiders every morning at 8:30, and anybody who wants to subscribe to the ARMR Report's free email service, you'll get an email once we've done our morning call. You'll get an email with access to that call so you can see it as well. So feel free to go ahead and click on and subscribe to that. Okay. What we talked about was, what was the information this morning? Risk monitor red, okay? Negative gamma environment, big gap down open. We come into the day. How do we use that information? Well, we're already negative. We've already been bearish. We already have a lot of cash in the portfolio. And I'm looking all around the screen other than at you, because I got a lot of screens around me. I got trades on. So we're doing this in the midst of the game. And so forgive me for my wandering eyes. So how do we use this information? Okay, first of all, the ARMR portfolios are significantly in cash coming into the day. That's very important to understand because it affects how we trade to capture alpha, okay? So when we have large cash positions, and I'm talking bigger than 75% cash in our portfolios, our object every day, particularly on a big gap down day, is to find the long entries so we can capture that alpha for the day. We come into the day, avoid the collapse in the market, take advantage of the collapse, buy the indexes, capture upside, out before the end of the day. Thank you very much. That is my favorite day trade. Okay? In a negative gamma environment, risk monitor red, which is the ARMR Report's assessment using our algorithms, right? And a big gap down. So I'm putting together a playbook for ARMR subscribers so you could see these trades and print them up and just literally flip through the playbook and say, what do we have today? Big gap down, negative gamma environment. How do we trade this day? This is what we do. Take a look at this, okay? These are the indexes, the S&P, the NASDAQ, small caps, Dow, and we have to always watch volatility because the VIX index is a major driver into all these other trades, okay? So we don't trade VIX, but we use it as a guide. Each bar is 3 minutes. Obviously, the up bars are blue, down bars are red. All the lines on the screen, with the exception of these purple dashes, are an ARMR algorithm called the ARMR Price Movement Profiler, okay? The purple dashes are our spot gamma locations because we love to trade gamma, and you're going to see how we do that right here, okay? You're going to watch this happen as I walk you through it. Let me start first by telling you that this is our lead indicator screen. We watch Tesla, we watch the blockchain, cryptocurrency stocks, the semiconductors, and treasuries, okay? Hang on a second. Hang on, I got to book some more profits. Don't go away. Okay, I'm going to take my gain off the table and hang on a second. So what I'm looking at is a breakdown off of the targeted spot where we wanted to book. These trades have gone above what I thought the market would do at this point, and so all of this is gravy, and any weakness is reason for me to book my profits. Okay. Now I'm going to let you guys determine where you book it, how much you book. I'm not going to walk you through that. I'm just telling you what I'm doing right here as the markets are coming in, having found resistance right where I think they should find resistance. And so, and you could really determine how you want to book your profit, right? Everybody's different. You want to try to wring out the last possible tiny piece. I get it. Go for it. You know, but one thing I like to do is when I hit the targeted dollar amount of the money I'm trying to make on a particular day, and it goes above that amount, I kind of raise my stops to that amount. I know what my strategy can max out at on from a statistical point of view, the dollar amount based on what I trade. And when I hit that and then go over it, I know I'm in rarefied air. Statistically, small probability the market keeps going up from here. So for me, I'm just trying to get the white meat off the bone. And when I get it, I don't let it go. I'm like a dog with that bone. Okay. So let's go back to discussing. And so see right here, I'm just exiting the position is what I'm doing. All right. What I'm doing right here. So let's just go over what our entry point is, and then we'll talk about the exits, which, by the way, I'm exited. So I'm out, and now I can relax and chat with you guys. Okay. Step one. Let me just walk you through a 3-step process to what we look for. So the information we know, we come into the day, negative gamma environment. That tells us a lot of volatility, and we could trade long and short. And as we're talking, we might get a short opportunity, and I'll tell you if I put that on. The risk monitor red is more of an investing point of view. So we know we're not buying any stocks today. That's how that information is used on our trading desk. I'm not buying stocks today. I'm trading indexes, and I trade the triple indexes, so I get maximum exposure, right? But that's a day trade for me. I'm not turning that into swing trades because the risk monitor is still red. So the next piece of information for our playbook is a gap down morning. Now, what do we do with the gap down morning? All right. So the gap is right here. You can see the market closed here, opened here on all the indexes, right? It trades straight down in the morning. Now, one of my favorite times to put money to work is between 10:30 and 11:30. And what you're going to notice here, I put it in a green box for you. This is the S&P. Okay. Is the S&P comes down and craters and bottoms at 11 o'clock. But let's go look at our lead indicator. The lead indicator today was without a doubt Tesla. And we shared this in the trading room, and I shared it on Twitter. So if you all would like to follow me on Twitter, you can. It's at Brett Rosenthal. StockTwits is ARMR Report. You can find us at the ARMR Report on StockTwits. Okay. I published this morning as it was happening. I said, here's the entry point into Tesla. Gap down, tight consolidation around the volume weighted average price, breakout above the key gamma level, which was 1,000. That's where you put the trade on. You had to deal with a wiggle here, but it never took us out of our stop. And it's been up all day. Okay. Right up to the ATR, got rejected at the ATR. So the trade for me would be over right here on this stock as it gets rejected. And now it's come back out and broken above the ATR. Average true range is what that is. Okay. But look what time Tesla does this. And this is how important watching Tesla is. At 10 o'clock, Tesla tells you the market's trying to go up. That was a full hour before the market indexes gave you the risk on entry point. But you could see the higher low that Tesla was making at that 11 o'clock time frame, never closed below the VWAP, volume weighted average price, for those of you who are new. So on the trading desk, and this is a live trading desk, you can subscribe and join us every day. We do this every morning, and we're sharing the screen, and I'm saying, okay, here it is. And I put this little green box up here. I said, bing, there's the entry point. And what we love to see when we put these trades on is confluence, when all the indexes are doing the same thing at the same time. So you can see right here, the S&P is doing it. The NASDAQ is doing it. And by the way, look, it's popping above the key put wall that spot gamma supplies for us, right? So the Qs are going above the put wall. The S&P is giving us an entry point this is the first standard deviation below the VWAP. And whenever we have a straight selling for the first hour and a half of the day or hour of the day, and you can't get above that yellow line right there, and then you pop above it with this consolidation, that's your entry point. So the market ripped right up to the spot gamma level. See that? Guess what? First trade was over for us. We booked our profit on that move. It was an aggressive sell-off with a buy signal, put the money to work, pops up, risk monitor red, negative gamma market. That tells us we have to book gains quickly in the morning trade, which is what we did. That's the information. That's how to use it. Okay, then what we did was we took a break, had lunch, kept monitoring the situation. And what I expressed to everybody on the live trading desk was, what I'm looking for now is a test of this original entry point that holds preferably above, making a higher low, which as you can see, it did. Made a beautiful higher low. Okay. So when it popped back above the VWAP, this was the opportunity to put money long the market again. Please notice exactly the same situations occurring in the NASDAQ 100. Confluence is key. You need to see the same type of behavior in these two indexes. Those are the best trades. So when it popped above VWAP at the same time that the S&P is popping above VWAP, you put the trade back on. Now, we haven't talked about stop losses yet, but that's the key here that allows you to throw your hands at the situation. You got to, like a boxer, you got to keep throwing. You can't be afraid. What's the fear? The market popped up and then consolidated in here. We're buying this. It popped up and pulled back, and we're actually buying it right here around the VWAP. The stop is the low of the bar that goes above the VWAP. So the risk is minimal, but as you could see, the reward is significant. Risk is minimal, reward significant. We execute. We don't care what we hear on CNBC. We don't look at the P&L of other stocks that are in the portfolio. We're just trading what we see. We get the entry point, we use the stop. Back here, this was an easy entry point. The stop was a new low on the day. Very low risk, high reward. Okay. Now, this is how I trade it. You could trade differently, right? Here's the entry point. You could just hold this all day. It never goes below the low of the morning. That original stop never violated. I'd like to trade right at, key gamma levels, book a profit, see how it trades, then put the trade back on. That's just me. Okay. And so what we see here, and by the way, on this trade here, we added, on the second trade of the day, we added the small cap index, and we put this trade on as it popped above, actually right tight in here. We didn't wait for it to go above the VWAP, put it on right here. And then when it popped above, we were already making money. Okay. So all three of these were in the portfolio. Now, what was VIX doing at the same time? VIX right here at 11 o'clock is topping when the market's bottoming. And our second trade we put on is right in here at 1 o'clock. And where's VIX? VIX at 1 o'clock is breaking below the VWAP. So you're getting confirmation on VIX that the break above the VWAP on the S&P is legitimate. That's how we use VIX. Right? And there's the move. Now, for my money, when I get a move that like kind of melts up like this and we break that uptrend and I've made the money I need to make for the day, I'm out. I book my profit. I'm happy. The market could easily keep extending. Here's where I use some of my own personal opinion. Once I've hit the target and I've raised my stops and I see some selling come in, the risk monitor's red. We're in a negative gamma environment. Now, it doesn't mean the market can't go all the way back to break even today. It absolutely could. Okay. I've seen that happen a lot. And I won't capture that. That's okay. But if we're really at the start of a major correction in the market, then this market's going to stop going up right here. It's not going to close the gap. It's going to go right up here and make a top and possibly roll over. It's 3 o'clock right now. It's not rolling over right now. So who knows? Maybe it's going to go up here. But you could see here and here, these little red dashes are pivot tops. And so when it makes some pivot tops at the opening range high and breaks back down, I say, hey, thanks for playing. I just booked my gains. Because now, to me, the reward to risk isn't worth it. There's too much risk from here. This is the 50-day moving average on the market. It could easily go back up there and test it. So it gapped below it, could come back up and test it. It certainly could. Okay? But for me, my money has been made today. So I just wanted to share that with you guys to see how we trade on the trading desk. We're going to now write this out. I'm going to take these charts. I'm going to write it out. We're going to put it into our Slack room under the education page for all ARMR Insiders. We'll put it on the website. Okay? And you can take a quick look. I'll show you where that's going to be. Our website's back up and running. We were down this morning, so let's see if this is working. Nope. Page isn't working right now. That was odd. It went to... Did that go there? No, I don't know what that was. I don't know why it went there. Okay. If you scroll down, what we have here is ARMR chart diagrams, day trading playbook. Okay. And who knows if this is going to work right now, but we're working on the back end of the site. So we'll see if this pulls up. Oh, here you go. Okay. So in here, what you're going to see is a detailed step-by-step of how we put these trades on. Long setup, trading the Fed day. This is how we trade a Fed day. Right. And so what you're going to see is this morning, what you're going to see, tomorrow morning when I post it, it's going to be risk monitor red, negative gamma market, big gap down. How do we trade it? Step 1, step 2, step 3, because you're going to see these plays over and over and over again when you're trading the indexes. And this is why I really only trade the indexes. I mean, every now and then I'll trade an individual stock, but the probabilities are so high trading the indexes because of the repetitive nature of how they behave that I really just focus all my capital there. I use the triple ETFs, but you can do whatever you want. I mean, I know some guys who use this information and trade options. Other guys are out there trading the index futures. So it's really just what you're most comfortable with. I share with you the ETF approach because I think most people, who are in the equity markets are comfortable buying ETFs. They get it. They can go trade it. Okay. And I don't really care if there's a tiny little bit of slippage between the triples and whether or not I'm getting 100% of the return. I'm getting a large return trading the triples. It works for me all the time. And so that's what I do on an intraday basis. I don't hold them overnight. So those are my thoughts. I hope you find them helpful. I wish you all the best of luck, and I'll see you ARMR Insiders back in the Slack room as soon as this is over. Take care, everybody, and stay nimble out there. Be patient and defend capital in this market. There'll be more than enough time to capture upside. And I'll share it with you when we do. All right? Take care, everybody.